moving out of financial news, this weekend's collapse of the startup-focused lender Silicon Valley Bank was the biggest bank failure since the 2008 global financial crisis. Now, for the startup nation of Israel, the collapse could have major consequences for many tech companies here. Correspondent Nicole Tzedek takes a deeper look.
A frenzy at the bank after California regulators shut down Silicon Valley Bank due to a rapid, panic-induced run on the bank. The Federal Deposit Insurance Corporation, or FDIC, is now in charge of SVB's asset transfers as the White House closely watches what's now the second largest bank failure in U.S. history.
You mentioned Silicon Valley Bank. There are recent developments that concern a few banks that I'm monitoring very carefully. And when banks experience financial losses, it is and should be a matter of concern.
The main concern is in the high-tech and venture capital community, with many startup companies using SVB as their primary bank. For the startup nation of Israel, SVB's collapse has leaders on high alert.
If necessary, out of responsibility for high-tech companies and employees in Israel, we will take steps that will help Israeli companies whose operations are centered in Israel to overcome the liquidity crisis created for them due to the upheaval.
Finance Minister Bezalel Smotrich announced he's forming a team to monitor the collapse.
The team will be in contact with local high-tech industry, foundations and financial institutions in Israel and the U.S. for the purpose of receiving data and analyzing the possible impact on the Israeli economy, and as required, for formulating a response to Israeli companies.
The FDIC says all insured depositors will have access to their funds by Monday. The problem is, 89% of SVB's deposits are uninsured, leaving hundreds of companies and billions of dollars in a state of limbo.